Super Apple computer, super football Sunday 1/22/2012. And Apple goes really good with football, and so does Google, and so does ISRG, and so does a lot of things. This is a great company, and I'm going to tell people that on the weekly level, that when we got below the 10-week moving average over here, 1 week, 2 weeks, guess what? The third week, the fourth week, it got back above it. It did not even qualify for the bear, because when you go below the 10-week, it's got to be going down like it did, but you have to have 4 weeks below the 10-week moving average, the blue line. Apple recovered quickly, got back above it, made the high up here. I want to show this particular crosshair over here. So let's make sure that this is working correctly. This particular high was 431.37 here. And the low of the week where we were buying into it was 419.75. You've already worked off that first 50, that's the all-time 52-week high here. Now, granted, you got some gaps that need to be addressed right above the 400 level. But most importantly is the 10-week level is at 397.36. The 20-week moving average at 395.58. The bull part is that this is going to be the support level right here where these crosshairs are. Right over here. This is going to be it. Okay? Right above 400. So, do we feel that they're going to do great on the earnings? Absolutely. Do we feel, and they report Tuesday, and they're coming down well off the high. So, between this weekly gap right here, the low end of that is 409. Okay? Now, depending on what happens Monday and whatnot, and Tuesday going right up to the close, is that's going to be the lower end of that gap at support at 409. If we go back over here to the high of 403.59, that's going to be the support level. This weekly high bar right here that was done on 2/18 of 2011 on the weekly, and that was 403.59. Any drop down of these support levels are going to be viable unless they ride out, miss the earnings, and guide it down. I don't see that being the case. None at all. But what I do see being the case is that we're not totally overbought, but we're up at 78.83%. And over here we were at 75, so we kind of have climbed. The weekly trend is about as bull as you can get for calendar 2012. This MACD reading's been climbing to 14.1, which is fine. What I will say here in the trend tool section that we're going to use, we're going to go to trend tool, and we're going to build that in right there. We're going to build in the fact that I'm going to take out this trend line right here. I'm going to move this weekly one up. And remember, earnings are earnings. You've seen what happened to Google and ISRG. Great quality companies. But you got to remember that on the daily, when we had shorted Apple back over here, was a long time ago. And we made a bottom because this is on a daily 200-day moving average, and we went through all the resistance levels here. And it was verified here, and we have rallied up into the new year with the daily reversal, and this is what it looks like. So the same thing that I'm showing on the weekly come into play right here, because that's going to be the daily gap up. This particular low to the 52-week high, it's sitting on support, and it's slightly closing below the 10-day, and that's what the public will look at. It's got little support levels all through here. Now, remember, we will trade it going into the earnings, and if we can buy the calls cheap enough, because you've had a great run, and earnings are very volatile, as you've learned, and it's all about that the 52-week high is pulled back, and where the current support levels is, based on Tuesday earnings, is that we're a bull. And yeah, we are, but just because we are a bull doesn't mean that we're not going to be looking at the $400 put in case there was a problem on a weekly level. And that's going to be well below the market, depending on how that sets up. Okay? But for the most part, we're going to be looking at February 445 call? Well, we're going to be looking at February 430 call. Why? I'll tell you why. Right here's why. Because that's the put that had come up from the lows to here. It got marked down to deflated area. The puts are deflated now, but they're not nearly as deflated as they were because the low was $14 and they moved up to $20.58 here. That's what the put side of the 430 looks like. That's when everyone got in because they were deflated and Apple pulled well off the high. Now, if you go over here to that 430 call though, well, let's take a look at where that was retail. And why do we get to minimize risk? The high of the contract, MMT, was 1561. The low end is 1043 on Friday. They've taken over $5 of risk out of the entry, but that 430 call would have a great bang, and the 430 call is not overbought. It's not a 430 call that's way up here at the high. It's pulling back. It's not way up here in the inflated area either. But this is the history of the February 430 call. Now, if you go to the 420 call and we like it, it has more risk. It was retail up here at 2150 and the low is 1520. But they can drop down if they were to put a spin on the stock. The one that we like with the least amount of risk is this 445. That was retail over here at the high of $9.55. The last high on the contract was $8.50. The low on Friday, we hit $5. So we're taking out a lot of the risk from this value. Or can you imagine being inflated up here at 1380? That was the all-time high. We're going to be looking at this side of the market and where we can get in. I like these around $4.50, $5. Now, when I look at the put side, though, if I want to go a 390 put, it was deflated over here at 310. It's not in, but we would look at something like this just in case there was a mishap if we want to be in before the earnings. If we don't, then we just simply wait. But we believe, until proven wrong, that Cook is going to deliver an outstanding quarter. The 440 that is up and out of the money in this time frame, that 440 was up here at 1065. We're starting to pull back to lows where $4 have already come out. So if I'm buying 10 contracts, I'm saving $4,000 worth of risk because I'm wholesale. Can they get even wholesale? I mean, they're really wholesale over here at 290. That's always the downside in case they did anything. But we're going to be trading it. And we're looking for the reversal. Dollar reversal equals dollar risk capital taken out of the trade. And we're just looking at these various strike prices because we know one thing for sure. If you look at up and out of the money here, the 450 call was 750. And now it hit a low of 390. A good way of playing that one was if we could get this down here at about $3.20, we'd love that. 320 to 350. Because it puts us in play for another 52-week breakout and a good earnings report. And this is what the calls look like from where they were. And then the put side at the 430 strike, as I showed, it too was deflated when it was making a 52-week high and they popped up. The puts were really inflated up here, though. And they came down to the bottom. And you can never ignore that deflated area because you've always got to look at the balances. So, having said that, we like the Apple trade. And not only do we like it, we're going to make money on it. And we're going to take advantage of the stock in after hours, just like we did with Google and other ones that were famous for it. And we're famous about wholesale prices versus retail. We're famous for discipline because gives us the vehicle to control ourselves and get the best prices. And then we can sell it back to the public. Let them own your profit. Bullish setup, Apple daily chart, 20-day moving average comes into play. We'll see if we come down and test it on Monday or Tuesday. If we do, or does it start, we may have to buy right away. It just depends on, now that we're closing below the simple 10-day, is how we would test down here at around 415.50, and that would be about a $15 or $16 haircut off of that high, and you'd be taking that much of the 52-week high out of the trade going into the earnings where you would have the upside. Apple Computer, call side, put side evaluations. You can see the open interest is that on that 4:30 call for February, 10,000 of them were traded, and the open interest now is 35,000. That's your biggest contract here at the 4:30, right here. The other thing that we like is the biggest volume open interest up and out of the money at the current is going to be the 4:50 call with 15,000 open contracts as far as up and out of the money goes. Now, when we take a look at the fact that there are 28,000 contracts open and 6,000 volume traded at the 425, we can see that under volume, the daily volume, the biggest contract acquired was a 430 on daily volume. And then you got the 450 as a daily volume, okay? And even in the money at the 400, you had 5,200 contracts traded. The open interest is 20,000. But then when you go right across the spectrum, you got 27,000 put options open at the 400 to protect the downside. That's your open interest. 4,100 of them were traded. So this is the open volume on Friday on the put side. But the call side, you can see, well, it was weighted more to the upside, and at lower strike price levels is where you can see clearly here the 430, this one here, had 10,000 of them traded. Let us not forget, though, there was 1,600 puts, 3,000. So people are barreling in on this side of the market as well. Only because the simple fact that some people want protection on it because last quarter it got mutilated. Call and put strategy, MMT. Sunday football preview, falling through the 10-day moving average, and hopefully your football team, which one you're hoping for, today is closing above the 10-day moving average and not below it, because if it is, you're going to lose. Period. San Francisco coming on strong. That's the support level. I'm going to conclude it. I'm going to give out alarms. We're going to trade it. We're going to make great profits. We're going to be trading the equity at support because it could run this thing right up until Tuesday night. And the stock is sold off $11. We will be doing 200 shares to 1,000 shares at support, selling back to resistance.